All right, so just a quick one. This isn't so much a technical analysis. Well, I guess it is, but it's what I've been just trading at the moment. It's about 3 a.m. Australian time, shitty time of the day. So I've managed to pick up basically all 300 points of, well, 300 points of this move down, which has been good in a couple of trades. One from last Friday morning at 2 a.m. and another one just earlier tonight as the toilet flushed. And I've squared up, and I just want to say this is my thinking based on the technicals as far as why I did that and how I employed that in the trading strategy. One of them was there's this level here, somewhere in here, right? Between 42.40, 42.50, and I guess a bit higher, like 42.75. But in any case, it's somewhere in there. Let me draw that other line. Somewhere in there, right? We can see when the market busted through this high, kind of came down, went up, and I remember saying with this little top in here, so it's going to come back, and it's going to come back to here, and it did, and then it broke it. When it broke it, that's when I shorted at 45.67, so it's a little bit higher up there. That was the first short I did. I did another one down here at about 4,400. This morning when it started singing through. And I guess the same thinking applied this evening, or this morning US time, just as it did boom and then boom, basically had it retest there. That's kind of what it's done here on a bigger scale. So to me it was, so that was one reason why I thought, right, well if it goes here, that's not a bad short-term target. I still think there's a very good chance for it to go lower. But this is a good place for a pause. So that was one reason. Another reason was massively oversold on the hourlies, like massively. That can be taken with a bit of grain of salt when you get range breaks though. The RSIs generally apply better when you're in ranges. When you break out, they do go to the extremes and they're just less reliable of an indicator. But in any case, it reinforced that this is obviously a dramatic move. So that was the second one. Another one was when you look at the gap above there, it's 275 points, 260 on the narrow, and here it's basically been the same. Okay, and again, part of the thinking when you do get ranges up here, or ranges, when it breaks out, it kind of takes that, it sort of finds the equidistant point as far as its target goes. So the same thing obviously applied, here, right, where it had this, was in this range, not a well-constructed range, but a range nevertheless there. And where did it go? Well, it found the target, whatever that distance there was, same up, and it's just reversed. So that was the third reason. And then the fourth reason, which I do look at, particularly when entering and exiting trades, I just look at the Bollinger Bands. Being an ex-options trader, these things, I do like them, right? Because they're all about standard deviations. And it's a massive move in terms of standard deviations, right? We haven't seen anything like that, at least on a daily. We did see a bit of it here, right? But this was like COVID inspired. This has been a shock, but not quite the same as that. Now just back here, just a little flashback to when I talked about RSIs. See how this was massively oversold on the daily, right? But it still shot through like by a country mile, right? And so that is the danger of the RSIs when you're looking at them for range breaks. They are far less of a reliable indicator. So look, that's what I've done. I also did a similar short trade in the Aussie market as well, and picked up about 120 points out of that. It's done the same thing. Just taking out a bit of a noise here. That really was the range, and it was 320 points, and then where it's come back to was 313 points. Similar level in the Aussie market actually came back to that 23 retracement, and that 23 retracement, you can see let me just redraw that one there. It actually comes back to quite a good level back here. That's the pre-COVID high that it came back to. So that's why I took it off. Again, there was just a number of reasons. Oversold, grain of salt, as you can see here. Obviously, these oversolds can go far more. Equidistance, from the range to the target, hit a good fibbo, hit a good technical level, and I haven't looked at the Bollinger's on this one, but no doubt it's on the extremities of that. So that's what I've done. What I'm looking for now is to see some confirmation whether this is a turning point or not, whether it's going to be a continuation. For those kind of things, I'll be looking at some negative divergence. I don't know if it's negative this way around. Haven't seen it yet. This looks like this is looking like it still could form a new low. But at 3 o'clock in the morning, I'm probably going to pull up stumps and just wait and see. I might take another look at the market just before the US close, because the last few days there's been a lot of selling just in the last hour of the markets. So I'm going to pull up stumps tonight. I'm also short the Aussie dollar. That's the other thing that I shorted this evening, and that was just on the back of the risk off that we've been seeing, and it was also a big break of that flag there, bear flag. And this one I've had my eye on because from there the recovery point was bang on a fibbo. Okay, so I did sell it there, bought it back, resold it, gave up a little bit in the mix there, but resold it. So basically I've been short from there. So it was 72.79 that I was short. You can see a beautiful little technical turning point in there. 72.79 I was short, bought it back at about 72, sold it again at about 71.45. So I did a bit of slippage in there, but had the position off for a few days and looking for it to go lower. I think that there is a chance for this, particularly with the dollar strengthening and the general risk off for the Aussie, to have a stab at that low. Interesting point. Anyway, that's what I've been doing, and that's technical analysis in practice. Hope that is helpful. Catch you later. Ciao.